Hello, everyone, and welcome to the CEO and Market Expert interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from X or former Twitter. Today, I have Greg Hall in my show. Greg is the CEO of Alligator Energy, a company with uranium assets in Australia and nickel copper cobalt project in Italy. Greg, you are for the first time in my show, so welcome. It is great to have you.
Thank you very much, Lucian. It's wonderful to be here.
Thank you. Greg, can you share to my audience your origin story and how did you become Alligator Energy CEO?
Well, thank you for the opportunity to talk to your viewers. My background is I'm a mining engineer by trade. I first came into the uranium mining industry in 1981, joining as an engineer on the very, very early stage Olympic Dam project. I was on that for 11 years and departed as mining manager of that project after we established the operation in the mid to late 80s and did the first expansion. I then moved into, travelled overseas worked in iron ore in Sweden. I came back into the nickel business in Australia before getting back into uranium as mine operations manager at Ranger, the uranium mine in the Northern Territory, which is now shut down. After that, after managing the Ranger operation, I joined the marketing team for uranium and nuclear fuel within Rio Tinto, and I did that for about 5 years. So I did market a lot to utilities in North America and parts of Europe, learning a lot about the industry, visited many nuclear plants throughout Scandinavia and the States and other areas. So it was a great education about the broader nuclear industry at that time in the early 2000s. So post that, after a bit of alumina and aluminium marketing, I joined as founding managing director of Toro Energy at the time of the start off of the last uranium boom we had in 2006, 2005 or 6. And we achieved in Toro the first fully permitted uranium project in Western Australia, but just as a tsunami hit Japan. So that put any paid to any operational plans we had for the time being. Post that, I was in copper projects, the CEO of a copper company, and helping to manage another project before joining the board of Alligator as a non-exec director and took over as CEO in 2018. Alligator started life as a pure explorer in Arnhem Land, just in the Northern Territory, and we expanded the company through 2018, 19 and 20 into other projects, including the Samphire project in South Australia, the Big Lake project in South Australia, and some overseas interest in nickel cobalt. So the company has grown rapidly, and we managed to pick up our uranium projects prior to the pickup in the equities and uranium price. So we've done very well on the market. Consequently, sometimes you have to decide, there's going to be a pickup sometime, and you get the assets that you need.
Yeah.
So yeah, I've got a long background in everything in uranium as well as a few other commodities, but certainly am very much enjoying this part of the cycle of our business.
Yeah, agreed. Quite impressive background, multiple commodities, multiple jurisdictions and places in the world you have been. So definitely a great breakdown of your career. Greg, brief uranium market comment before we talk Alligator projects. Where are we now in the terms of sentiment for uranium equities?
Well, look, I think the sentiment for uranium equities is reflective of a range of things. First of all, the fundamental supply-demand will drive both the spot price and the long-term price, or the price, let's say, that utilities are willing to do deals at. And so equities will be driven by both the news in the market, as we've seen recently with the Kazakh news and a few things that very much drives it. Yeah. And nothing indicates that more than if you go back to December 20, when the market started to move. It was around probably around the 16th or 12th or 16th of December 20, when the Biden administration, newly come to power, declared full support behind the nuclear power industry in the United States, the biggest fleet in the world. It's the very first time that the Democrats had ever put full support behind nuclear. Now you had bipartisan support, Republican nuclear, for that fleet. At that time, uranium equity started to move. The price was still at around $24 a pound. In fact, didn't move until March 21. So you can see that news and what might be happening in the industry moves equities sometimes well before price or despite price. So news in the market is what drives a lot of equity pricing. So we're at the stage now where people understand the theme of demand for uranium. They've seen the growth in nuclear power. They see the new plans for small modular reactors, and many of them around the world. And ultimately, this will flow into the steady 3 to 4% growth that we're going to see in nuclear. The other big driver of equities is we know how long it takes to bring projects into production.
Yeah.
We've got the restart projects, which are getting back into the market, like URE, like Peninsula, like Paladin's project in Namibia, like even Cigar Lake and MacArthur River, which were on good care and maintenance. Now you've got UEC Encore, Boss Energy. So you're getting those restart programs coming in. Now, we all know from the diagrams that that's not enough uranium to fill the gap totally. We will see existing mines be extended. Already the Chinese are going to extend Rossing. Yeah. Doesn't matter whether it's economic or not, they will extend it.
Agreed.
They will do the same with Husab. They will lift production and do that. You'll see Cigar Lake will be extended, probably MacArthur River. You will see the extensions go on. So it'll be very interesting to see in the next 4 to 5 years, as those restarts come to full production, the extensions get announced, and then you've got new developers like us starting to come on. So the utilities are going to see a slightly better rebalance there. So I think that now is a time for driving equity pricing. The next 2 to 3 years will be a time for putting in contracts, because longer and stronger forever is always talked about, but never quite the case. Either you get balance, something happens, something could change. So I'm very pleased to see predictions of long-term uranium prices for term contracts at $80 to $100. That's exactly the range that you need. So that's a long-winded answer to your question, but I think that we're in a good market slot for new players now coming onto the market in the next 4 or 5 years.
Yeah, agreed on that. And you are prepared with your projects for the future. You have the most advanced, your flagship project is Samphire Uranium project. It's in South Australia. Let's start with the overview and what are you currently doing over there? And then we will go to the specifics from there.
Sure. The overview of the project is it's an area of uranium that was discovered about 14, 15 years ago, advanced by that company up to the tsunami in Japan and then just stopped. But they did a great job. They did over 700 drill holes, and they did initial hydrogeological testing because it is an ISR style project, and then really had to stop. So we picked the project up in 2020. We have done some advanced additional drilling on to the one of the main resources. There's 2 projects, Blackbush and Plumbush, but Blackbush is the one that's we've got all the full agreements over, and we've enlarged that footprint a bit. The resource shrank, and that's because the original resource was a global 100 ppm cutoff grade. So we've brought it back to just those part of the resource which are hosted in the amenable Kanaka sands, where you can do ISR, not the clays above or clays below. As well, we lifted the cutoff grade to a 250 part per million, and that's needed for a reasonable ISR project. So it's 60 to 80 meters deep, quite shallow, but has a good head of water. It's got hypersaline water, so that's one of its negatives, not so much for the leaching, but for the IX plant, which we'll talk about later. But we can overcome that. And we have a massive footprint of known paleo channels, because these are paleo channels incised into the granite underneath, which is where the uranium comes from. This Blackbush project, is only 10% of the known channels. We've got an exploration target range that only covers 40% of the known channels. There's 58% not even drilled yet. And there's further channels to the south, which we're about to do some ground gravity on to find. So it's a region of potential satellite mines, and that's the beauty of it for us. But we certainly have just completed a scoping study, which gives us a viable project for the main Blackbush resource at the moment.
Yeah, you mentioned Blackbush and Plumbush. I mean, Blackbush deposit only has robust initial scoping study based on 10 million pounds U3O8 over 12 years, I think. So do you think that Plumbush Prospect could add similar numbers for the project, quantities and economics?
Yeah, so Blackbush is about 12 million pound over over 12 years. Yeah, that's right. So it's 1.2 million pound per year. Now Plumbush was smaller, but it wasn't drilled very densely and it wasn't extended much. So we are now getting down onto the ground, talking with the landowner there to come down on the ground there to do initial ground gravity work to tighten up the channel architecture and then initiate some drilling. So we will be back onto that project hopefully within a year, but also on broader channels. The best extensional resource for us is around Blackbush at the moment, because we've only focused on the inferred resource area, lifting it to indicated so that we can do the studies. Now we're stepping out from that. So that's probably our best first extension, but then we will come down to the south, both the Plumbush and to other mineralized channels to enlarge. I don't think Plumbush will be quite the size of Blackbush. I think Blackbush will expand to at least another 50% roughly capacity, but Plumbush will at least add a good portion as a satellite project. And the beauty of these sort of projects is you only build one plant. You modularize a plant so it can be easily expanded from 1.2 to 2.2. You bring in by 10 or 15 kilometre pipelines from satellite prospects of well fields. So once you start a project, you can expand it.
Yeah, I get it. So you believe that you have a lot of room to expand and upgrade resource on Samphire?
Yes, we do. We put out an exploration target range in December, which had a very pessimistic additional 15 million pound on top of the 18 we have, and an upside of 75. So most people who know how exploration target ranges are done know that there's quite a wide range always evaluated there, but it's always somewhere in the middle. So I think we'll get a consistent over the next 2 years of solid resource drilling, which will be roughly the time, 2 to 3 years before us to start into the finalisation of approvals. We'll get a good resource established. Look, the Beverley Uranium Mine here in South Australia, which has run for 25 years, Beverley, then 4 Mile, they started at 1.2 million pound per year with about a 25 million pound resource.
Yeah.
25 years later, they're running at 4 million pound a year and still growing. So that's the sort of thing you can see. I mean, the 4 Mile deposit is quite unique. We don't pretend to have that, but certainly these projects expand.
Yeah, if everything sorts out, ideally, 2027 will be production plan.
Yeah, 27, 28. We're seeing some slippage due to the fact that while South Australia has approved 5 uranium projects and all of them have run, and they have an experience base in both major political parties and federal and government have approved mines in South Australia. But you get turnover in the regulatory department, and so you have new players that are learning the ISR system, but you do have some very experienced regulators who understand ISR, so that's useful. But all aspects of starting up a new mine area take longer. And Samphire is in a new project area. It's 20 kilometres south of a regional centre, Whyalla. We're doing a large amount of community engagement work in that region. But the good thing is that region has a lot of resource industry experience. There's large iron ore mines nearby. They've got large contract groups there. A lot of people support the uranium mines at Olympic Dam and over at Beverley. So there's a knowledge of uranium, which is useful. But it is a new area, so that's going to take a little longer. And we're happy that let's put it this way. We can always put in some early stage offtake agreements, which are conditional upon startup. We've had utilities wanting to do that with us even last year. We said just a bit too early, so let's talk at the right time. So I think time-wise, we'll even if we're a bit delayed beyond 27, we'll still be in the right shape.
Yeah, that was my next question. Any news on offtake agreements? Do you see more approaching and knocking on your door about that?
Yeah, well, look, as I mentioned to you, we utilise Kevin Smith, who's a senior consultant with Traxys, as our marketing agent. Kevin, who I knew in my marketing days, he's got a very broad experience base with all aspects of the nuclear fuel cycle and nuclear fuel market. So Kevin has got us in front of nuclear utilities with direct meetings in North America and in Europe initially. We've met probably with 25 utilities. In particular, some of the US ones were very keen to start discussing with us last year some early offtake arrangements subject to approval and financing. and these would initiate at a slow level and then ramp up. So it's a little bit early for us to do it. When we talk about our status and our work this year, it's probably going to be more towards the end of this year that we could start to consider, or early 25, start to consider those initial offtakes. Now, many people will ask us, and they do ask me, well, why would you do that when the market's longer and stronger? And again, I say, if you've got some long-term pricing in the range of $80 to $100, as you saw in the last uranium boom, sometimes it's valuable to lock in some layering pricing at those sort of levels and underpin your fixed cost components for your future operation. So I think we will be doing a bit. We've got a marketing plan we're developing for our board to consider to allow us to do that later this year.
Okay, offtakes, production, we covered that. But Greg, what work do you still need to do from now till 2027, 2028 first production?
Okay, we've put out last year a scoping study which shows good economics at the current size. We put out an exploration target range and a bit on our other exploration projects. But this year, we already started resource extension drilling at Samphire, and that we're going on solidly for now 2 years. The only breaks we have is when we jump off the land for the pastoralists for certain agricultural reasons, but essentially we drill right through. The other most important thing for us this year is around mid-year or third quarter is a field recovery trial. So this is a trial of 3 in-situ rings spaced apart through a small containerized pilot plant to test the leaching dynamics, which we're very confident with because we've taken full cores, large diameter cores out of the ground, test the leaching dynamics underground, and then through the IX columns in the IX plant. Part of our process is to test a reverse osmosis plant to lower the salinity levels such that the IX will work effectively with the salt-tolerant resins. So all of that test, that's very similar test work to what Boss Energy did some time ago for the honeymoon. So that test work will be this year. That's very important because those results will then feed into the start of a feasibility study. So our project manager is already on board who will head up that study and help run the field recovery trial. So that final technical and economic information on reagent usage, leaching dynamics, time of extraction of wells, all of that will feed into that feasibility. So that will initiate this year and run into 25. Mm-hmm. At the same time, once we have the approval for the field trial, which is coming up hopefully in the next few months, subject to the regulators, we start immediately the approval for the full mining project. We've already been initiating environmental work and other works on that, and then we start the process for the full mine approval, even while we're doing the feasibility. And that's probably the critical path for us, is the mine approval. That will take the time it takes generally. So that will determine when our start point is. But initial offtake agreements, if we do them in, let's say, early 25, we can start the discussion around financing at the back end of the feasibility. And so we can be very ready to go with everything else at the right time. So this year is resource extension drilling, field recovery trial, start of feasibility. Next year is a feasibility study, initial offtakes, and approval processes.
That sounds very good. So you will be busy in the upcoming period. Let's talk some numbers for the project. They are very solid. You have capex of 130 million, payback in 3.5 years, and NPV. I believe it's around 152 million.
No, that's our initial scoping study in March. That one we put out an updated scoping study in December.
Okay.
So those results, like the capital is still around 130 million Australian. We lifted the price we used to $75, still kept a low exchange rate.
Okay.
And we increased production rate from 1 million to 1.2 million pounds in December study. Okay. So the new study outcome is this: still around 130 million capital, and that's with 35% contingency in there. Now I'll tell you the reasons for that shortly. 2.5 years payback now.
2.5. Okay.
Yeah, about 260 million NPV post-tax, so after tax. So that's lifted quite dramatically with both the production lift and the price lift.
Yeah.
And an all-in sustaining cost of $33 a pound. So that's all-in sustaining. That includes wellfield drilling and everything. The capital cost is, we're very fortunate. We're only 20 kilometres away from a regional centre and power and water. If we were out in the outback, you're going to have 200 to 300 kilometre power lines. We don't have that. So we've really only got about $12 to $14 million of capital for that, for the infrastructure.
Yeah.
We don't have to build an airstrip. We don't have to build a camp. People can reside in the town of 20,000 people at Whyalla and commute 20 kilometres down to the mine site. We'll have buses running. So that gives us some favourable capital costs. The wellfield drill costs, we've been conservative on. We've put a lot of dollars in for that because we've assumed only around a 2-metre mining horizon on average within the sediments. Now, we have thicknesses of 4 to 5 metres, but we find clay bands sometimes in them, which means you've got one roll front going this direction and another roll front over the top in this direction. You can't mine them together. You've got to mine them separately. And anyone who knows ISR understands that. You have to mine the right hydrogeological links each place. So we've made some conservative assumptions in the wellfield drilling. We have an advantage in our drilling is shallow. It's only between 65 to 80 metres. So that's a cheaper cost for us. But we need to run a reverse osmosis plant and lower the salinity. So that's an additional cost. So all of those have meant that, we're slightly on the upside of other similar ISR projects, but it is right to be a little bit conservative at the current time. That's the right thing to do.
Yeah,
right?
Agreed. Okay, let's move to your second project. That is Alligator Rivers Uranium province in Northern Territories. You actually have 3 projects there, 2 prospective greenfield projects, Tin Camp Creek and Beatrice, and early stage greenfield project called Nabarlek North.
That's correct.
Give us an overview of those projects, current status and plans for going forward.
All right. Well, the Tin Cam Creek and Beatrice projects were the first ones that Alligator acquired and gradually accumulated from 2010 through to about 2012. And we worked on them for a good period of time. Now, these sort of areas, and anyone who knows the Arnhem Land area knows of the escarpment, the beautiful escarpment country there. Yeah. It's overlain by a thick sandstone. Now, this is worn away in many places, like at Ranger, there's no sandstone was over the top of that. At Jabiluka, it's only a thin layer. The issue with Tin Cam Creek and Beatrice was there's some thicker layers of sandstone over the top of the basement rock, so 200 metres or so. So that was quite expensive exploration. There's some valleys where the sandstone's eroded. We found some very good high-grade intersections. There was a small resource. We acquired these projects largely from Cameco, but also from some others. And we did get a small resource at Caramel, which we'll have another look at, but it's only about 6-7 million pound. The good thing about this area, and the reason why it's worth looking at, is because if you jag a resource up there of 40-50 million pound, you've got a 30-40, a 20-30 year mine life. Yeah. Now, Nabarlek North, we only had approved the collection of tenements there by the traditional owners in early 20, just as COVID hit, and then we couldn't get up there for 2.5 years. So we've only been up there for 1.5 programs. Now, the beauty of this area is it hasn't had the same level of work as down south, and it doesn't have sandstone overlying it. It just has a weather ground. So we've started our geological stratigraphic interpretation. There is known areas of uranium that feed up into that zone from, for example, our peer company Devex to the south. So we are following up those leads. We now, this year, will have some targeted deeper drilling because we've got a better understanding of the geology. We've got some good targets now and a raft of them, probably between 11 and 15 good targets to start drill with some deep RC drilling. So we're hopeful that Nabarlek North will start to bear some fruit. This really is not pure greenfields. It has a lot of smoke in some high-grade intersections, and we'll take that forward. So very interesting area, and it is still one of the highest grade areas of uranium in Australia.
Same question like for Samphire. In the terms of news flow, what and when can we expect some news from these projects?
Yeah, we put out the details of our work last year, which was still largely geological interpretation. We won't be on the ground at Aligator Rivers until July. The partly the issue up there is, of course, the wet season. It's in the tropics. And really, the first rains come in sort of October, November, but really from November on, you can't stay on the ground there. It just floods too much. So you can start to get on the ground in May, although there can be late wet seasons. The more guaranteed time is June. Now, we've decided to go on in July for a couple of reasons. We're doing a lot of interpretive work, and we want to spend some time going through that. The second is we guarantee in July we'll be able to start drilling no matter what. So there's no hesitation in getting on the ground. And this year's program will be a bit shorter because it'll be very targeted, deeper drilling. And we'll be looking for intersections. We'll be looking for the right rocks, which is really the lower Kale Formation rocks, which are host to Ranger and Jabiluka. So the news flow from that project really won't start until the second half of the year.
Okay. Let's discuss your third project, that is Big Lake Uranium Prospect in South Australia. Current status of this project and plans for the future.
Yeah, this one is exciting. This is pure greenfields. So the Cooper Basin is an area where there's a significant deep basin structure that contains oil and gas, and then it's been producing oil and gas for 70 or 80 years. It's got deep granites and it's got hot granites, especially to the north, where there was some geothermal energy trials done some time ago. So the granites have a lot of uranium in them. Now, the granites come up to the side, they have weathered zones and they have deep zones, but there is uranium spikes. Over the top are the sediments, which, if you go down to the south, host the Beverly, the 4 Mile, and the Honeymoon projects. So these extend about 200 to 300 kilometers to the north, and there is uranium in them. The oil and gas wells show these twin little gamma spikes, which look, in many places, look perfectly like the tail of a roll front. There was some drilling 12 years ago by a small company that did find some uranium, about 300 part per million. So we've had a structural basin geologist working with us now for some time, interpreting from the historical seismic data from the oil and gas guys where there could be traps in these sediments, where could the known waters that are there have potentially accumulated, and have they accumulated with uranium. Now, if we find the traps and we find uranium, then it's a massive area of a potential field. It's still greenfields. We think we'll find uranium. Will we find enough accumulated uranium for economic deposits? But it's got all the same parameters as many of the ISR fields in the world. Hydrocarbons as a reductant, as a la Kazakhstan. You've got hot fluids that bring the uranium up into the sediments, and you've got potential sediment traps. So it's exciting. Our first drilling is going to be on the ground either late April, early May. And so we've spent some time working through traditional owners and agreements. We've done the clearances we need, and we're now getting the drilling approvals through the department in South Australia so that we get on the ground. So that news flow hopefully will start immediately, because as your viewers are aware, when you're drilling uranium, you're using either gamma or a PFN tool, you get results straight away. So we'll have results out of that coming from May onwards, hopefully. Now, our main focus this year is stratigraphic drilling. It's to try to determine, is our modelling right? If we find some uranium, bonus, but let's see where these traps might be. I'm always cautious of greenfield. Sometimes it takes 2 to 3 years to get right into a greenfield project properly.
Yeah, okay. Greg, if you could expand a little bit on where are you in regards of federal export license, as this is one of the biggest hurdles for Aussie uranium miners. Only 3 uranium export licenses have been issued in South Australia. How is the situation?
Well, look, we've talked to the ASNO group, the Australian Nuclear Safeguards Office, and we don't need to have a federal safeguards permit for the field trial we're doing now. But once we've got the field trial and we know the economics are right, we initiate then straight away the export license parameters. Yeah. Now, that probably won't be the critical path. The critical path will be the overall approval of the project itself. But we'll initiate that post the field recovery trial. The field recovery trial, look, just being cautious for our shareholders, we need to make sure that the economics and the technical parameters all stack up and all work. And once we initiate that feasibility study, we know we're on a path. We initiate the export permits. We initiate the full approval process in a solid way, even though we've started some of that early. So it's getting the export license does take some time, but we've got time to do it. It's more the mine approval process through the state and the federal governments that will probably be the critical path to the project.
Okay. You also have non-uranium project in my neighborhood in Italy, Piedmont project. This is an early stage project, but some exploration work has been carried over there. Tell me more about this project, please.
Well, look, we acquired the nickel cobalt leases in Piedmont or Piemonte in Italy, northern Italy, in 2018 when uranium was in the doldrums, and we were looking for energy-related metals because we knew energy-related metals and minerals were the ones to be in. This area is where the African crustal plate, and the African crustal plate includes Italy, is lifting up over the Alps, and that's what's pushing the Alps up.
Yeah.
So this is in the foothills of the Alps, and it's where the crust has turned up. And so within this crustal rocks, there's these narrow bands of nickel, and there's 17 showings of greater than 0.5% nickel. There were mines operating there in these bands of nickel up until the end of World War II. So Mussolini mined the nickel for his war effort, and then it just stopped. There's not one drill hole in this area of 30 kilometers of tenements for nickel, none. There's very little geophysics because it's difficult. You're in foothills. We're going from 800 meters to 2,000, 1,800 meters some places. So we started to have a good look at this. We did to do some geophysics to see whether there's some deeper targets. We don't think there is. There's some graphite, and it's disseminated graphite, not useful, and that tends to mess up the signal for the EM. So we've got drilling permits that we can put in place. We're going to do a bit of a wider analysis because there's some of the tenements we've acquired which are not yet granted, which we think have some better prospects for larger deposits. We have been, we're trying to attract some interest by other parties to come in because we don't get a lot of, let's say, market value out of this in Australia.
Yeah.
So we have been looking for some time for potential partners based out of Europe who might see this as a good adjunct to their other projects. Now, the nickel price where it is, that might get a bit harder. We're doing very limited work on the ground there, but we do have drill permits that we can do some drilling there if we wish to at any time.
Okay, so you are open for JVs or a sale of this project. That is my next
Correct.
question.
Yes.
Your company open for M&A, and I mean that in both way. Are you considering new projects, and are you considering to sell some of your projects?
Well, certainly the Piedmont project we think will be more valuable in with other projects in Europe of some type with minerals. So that's one that we are looking for partners to come in on. We are interested in other projects. We recently, in fact, it was announced in December, we made an investment into a private in-situ recovery copper project here in South Australia. Now, I'm not sure how many of your viewers will know, but South Australia has a lot of copper. So Olympic Dam project is massive. The Carrapateena new ore body, the Prominent Hill, there's a lot of historical copper at Moonta and Burra, but there's also a lot of oxide copper at the surface. So the sulfide copper is quite good to mine, quite easy to extract through flotation. The oxide copper is hard work. It can have a variety of different oxide minerals formed. Generally, you can't do it through flotation cells. You've got to do it through some sort of heap leaching or acid leaching. Now, the company EnviroCopper that we've made an initial investment in, and we've got the right to go up to 51% ownership, has got two guys who've got in-situ recovery uranium experience, and they've done a massive amount of research into these fractured rock aquifers. It's a very different aquifer system to the uranium sands. It's rock, it's hard rock, but it's highly weathered. And so there's a lot of cracking and fractures through the rock, which means that you've got the ability for the copper ore to be exposed. Some of this has even got groundwaters, which have already got a lot of copper in it. So they've got the internal expertise. We are just on a technical advisory committee and on the board of observation at the moment. It's not taking away our work out of our Samphire project in particular, but it does represent an interesting opportunity for more copper production in the state, which the state government is very interested in. It has a copper strategy to expand copper production. And when I was talking recently to the head of the mines department here about our investment, he was very interested in what other areas we thought would be amenable to this. So we are very pleased with that. Part of the reason we've got this parallel stream of some energy mineral related activity is, if you have all your eggs in the uranium basket, great, people invest in you because you love uranium. But we've had 2 black swan events in uranium in our recent past. You've got to always allow for the fact there could be one. So it's sensible to have some other assets in your mix.
Yeah, that's a very good point. What about some nearby ISR companies? Are you looking for some of them? And in which other jurisdictions you would like to operate besides
Yeah.
Australia?
Well, I've been on the public record as being clear about this. We like the Australian states generally of Western Australia, South Australia, Northern Territory, a little bit harder in Queensland, but we are interested in additional uranium projects ourselves, whether they be exploration or more advanced. But we've also been looking in the US for some years. We have bid on some assets there, but not been successful. We are still looking at certain uranium assets in the US. So we think that's
Wyoming, Utah. Can you tell more?
The states we have looked at have gone from Wyoming, Utah, Colorado, New Mexico. Yeah, quite a few. So we know that the US government systems and the acts being passed now are going to support uranium mining in the US for a long time.
Yes.
You're seeing a positive development through many of these states encouraging people to get uranium projects advanced. I've got experience in the industry over there in the nuclear fuel business. We know it's a very positive place to be. So we are continuing to look for additional projects. But meanwhile, from our perspective, advancing the Samphire project will be the best value for our shareholders. It will create the opportunities for other things as we move forward as well.
Okay. Greg, who is beside you on your team? Who is in your management and advisory side of the company?
Well, look, on our board, we have two very experienced uranium people apart from myself. Peter McIntyre, who's been a board member for a long time on Alligator, was the managing director of Extract, which found the Husab deposit. And we previously had him, both himself and John Main, who was on the board of Extract. So Peter's got a long background in uranium, and including some in Australia as well. Fiona Nichols, who's recently joined our board in May last year, she was the head of ESG for the energy division of Rio. So she was on the board of Rossing, on the board of ERA. She's got very familiar with uranium projects around the world, but in particular, her expertise in ESG activities fits perfectly with what we want to do and how we're working with our communities and with our pastoralists and with our Indigenous people. Within the management team, our CFO, Mike Menchies, has been with us for more than 10 years. He understands the size of business we've grown into being now. He's worked in similar sized companies. Our chief operating officer and the person who's in charge of the Samphire project is Dr. Andrea Marsland-Smith. She was one of the most senior managers at Heathgate Resources for many years, and she led the team which discovered 4 Mile and won an award for that, which has been feeding into the Beverley plant for many years. So Andrea has now recruited an ISR experienced operating team under her. So we have a senior principal geologist, a senior hydrogeologist, so we have a senior process chemist, we have a project manager, and we have an environmental manager. So that team is already established, and we're adding to it constantly. And then we have experienced geologists under them, and now we're putting on graduates and training them up in roll front mapping, in drilling through sediments, in drilling for uranium, in PFN tools, all of those things. So we've got a team of around 30, not all full-time, but that's because some of the most experienced people, they've got families, they do other things, and you want to be flexible in offering them good roles. So Andrea has been a great asset to her team, and she continues to do that. On the exploration side, Mike Barlow is our exploration manager. He was with Geoscience Australia for 5 years. He's a very experienced geophysicist, did a lot of exploration for copper with BHP overseas. So he's got a very broad brush knowledge of exploration, and has been a great assistance to us in having a different look at our exploration parameters, all right, which is good.
So you are covered in all fields.
We believe we are, and if you were to ask me what are our key aims in terms of our projects and our assets future, Samphire is a key one. We think there is a chance to get a good deposit in Arnhem Land, and we'll continue to look especially at Narberth North. If Big Lake comes off, a few years' work might find a new uranium field. It might not. It's greenfields. It sometimes doesn't work. We are looking at other potential uranium exploration ground in Australia, because while we all look at the known projects, sometimes we don't look at actually, this is an area that hasn't been looked at for uranium, but it's got a lot of potential because of these structures, this feed in, these granites, whatever it is. So we are going to have a little bit of a look at some greenfields for a wider picture. But in particular, we're looking at similar things, projects which we might be able to acquire in the US and in Australia as well. So yeah, we're definitely on a growth path as well as growing that Samphire project.
Okay. Can you tell me more about the share structure and the registry? You got some big names after the last financing. Who is on your registry? Of course, the names you can disclose. And how much of skin in the game you and your team have?
All right. So we've got about 7,000 shareholders. So we're a very, very liquid stock. We still have a very small share price and a lot of shares on issue. And that's a legacy of where we started in 2010, shares we issued to acquire things and come forward. Now, from our perspective, it's not necessarily quite the right time to consolidate those shares. One of the things when we've raised funds in 2021 and in 2023, we've brought in quite a few significant funds. They've come in from anywhere from $500,000 each to $4 million each. Now, one of the reasons they will do that quite actively is because from our liquidity, if they want to get out at the right time, they can. So I'm happy for funds that come into us and make some money. They might jump out with 70% of their shares, but that's good because they'll come again. From our perspective, we don't have any shareholder that's more than 5%. Okay, we've got some of the ETFs, etc., in that 3 to 4% range. We've got a couple of players in that 3 to 4%. We don't have permission to name any of them. Many of them are behind nominee companies and prefer to be, and we're fine with that at this stage. But what we do see is as we go through a feasibility study and into the other side of that and moving forward, then we will need to take some action on our share register at that time, because that's the time you'll want some sticky money. You'll want some people who are going to come in and solidly behind you, and that's when you'll probably see us getting into people who are going to be in that 5 to 7 to 10% range and coming into the group. We don't need to push that yet. I think it is the right time for our shares to float a lot and be liquid and move with the market and move with our announcements. So we're fine with that at this stage. But yes, it's there'll be a time when we are getting much more focused on bringing in the right counterparties with the right long-term funds to finance our project.
Yeah. So rollback of shares is not on the table. I get it. What about skin in the game of you and your team?
Look, it's only sitting at around 3%, and that's because most of our team is new. So we have a bonus system of short and long term, which is in shares. But most of our team is new, so they've all got shares now, but only from the first 1 or 2 years. Our board members have got skin in the game, so in total we're about 3%. Okay, I myself are probably around 0.7 or so. I took a lot of my early directors' fees when the uranium price was very poor in shares, and I'm happy to do that. And I'm still very active in making sure that I look at where our share price is going, because it's going to benefit our shareholders, our staff, and in the long term, all of us. So while it doesn't, there's 2 views of this. Sometimes people want to see a lot more skin in the game, so you're really reflective of that. But with the funds we've raised and the acquisition of the projects we've made with shares, we have diluted both ourselves and major shareholders quite a bit.
Yeah, and you mentioned cash. What is the current cash position of your company, and are you funded for 2024 with all the works you mentioned you will do?
Yeah, we're just under $37 million as at the start of the year. We raised $30 million last year. Our cash burn means that we'll go easily through into mid-25 or more on that basis, and that's important because once we have the field recovery trial and the feasibility underway, that resets the benchmark. We'll also have an updated resource this year from all the drilling we're going to do. So there'll be a lot of resets at the end of this year, calendar year. A successful field recovery trial, starting a feasibility, a new resource update, and including some broader exploration. So yeah, we're well funded for the work we need to do over the coming 18 months to 2 years.
Good to hear that. Thank you very much. This was Greg Hall, CEO of Alligator Energy. Greg, I wish you luck with your company, with projects, etc. We will keep in touch.
Lucian, thank you very much for your time. It's been good.